Welcome to the Samuele Tini Show, where business, innovation, and sustainability converge to drive progress. Are you ready to uncover solutions shaping our future? Let's dive in. Welcome to another episode. Today, we are going again to explore the world of private equity, venture capital, and we do it with somebody who is doing it with our neighbors in Tanzania. So I'm very pleased to have here today the CEO of Afri Capital, that is Burak Buyuksaraç. I hope I pronounce you correctly, Burak. Thank you so much.
Thank you, Samuel, for having me. And your pronunciation is almost correct. So it's fine.
Fantastic. So I passed my Turkish exam. And you have done, Burak, you have done a wonderful, amazing deals in Tanzania for many years. And since 2010, you have been there. So we are really at the core of the emerging market. So I want to know a bit more. What is your journey? Why you committed to Tanzania?
Sure. As you correctly mentioned, I came to Tanzania in 2010 as a managing director of a mining company. So I ran that company for 5 years in Tanzania and in DRC Congo. But in 2015, we split up, and after 5 years of living in Tanzania and building a network and understanding the business environment and the local dynamics, I didn't want to leave, and I decided to stay and started my own businesses. So we started with tourism business as a travel agency. So we still run that company. It is our 11th year now. So that travel agency became a tour operator. We actually run it in Tanzania as well as in Kenya. And later we added some other businesses. We have a security business, security guards. We have 3 distinctive brands. We have a insurance brokerage. We have a consultancy business. In the consultancy company, we only provide feasibility studies and market research for Tanzania and for East Africa in general. We have a small trading business. We export commodities from Tanzania to abroad. And our latest business being Afri Capital. So we incorporated Afri Capital in 2024. So it's been little over 2 years now. But since I started Afri Capital, I'm mostly busy with that. So I would say 90% of my time goes to Afri Capital. So the other businesses are well established now. So they're running themselves. So they don't require my involvement as much as was before. So yeah, I'm spending most of my time with Afri Capital.
Fantastic. And then I can see the why, no? You are here, Burak, because when you from starting one, now you have created a conglomerate, and that is why also important. The Afri Capital is a way also to work as a businessman now to support businesses. So can you explain what do you build? Which businesses are you looking into with Afri Capital? And maybe since you know the space of emerging market is big, especially here in Kenya, but also in Tanzania. Which type of businesses, really private venture really look at?
We are sector agnostic. We don't have any limitations when it comes to sectors. What we really look at is the profitability, the bankability of the business, as well as the returns. So the business should be a good candidate as it needs to be a promising company. It should have a bright future. So I think I would say that is the most important component. And then we look at the track record as well as the reputation of the owners in the market. So these are the first things that we look at. Then, of course, we start with the due diligence and the compliance check. But as I said, we are sector agnostic, so we don't really focus on the sector. We focus on bankability and profitability of the business, or the potential profitability.
And that is important. And I won't like to add, because many people are now SMEs, capital is becoming the new world. So if from an investor point of view like you, which are the common mistakes that you see that especially SMEs or businesses in this area do, and they should avoid to attract a capital?
Well, there are many. Unfortunately, in this part of the world, accessing to capital, to local capital, is difficult because the banking systems are mostly based on securities and guarantees, such as collaterals, especially in Tanzania. So therefore, it is quite difficult for a early stage company or a small SME to access to capital because, for example, in Tanzania, the banks are requiring 125% of the capital that they are providing as a loan facility as a collateral. So, for example, if you need $100,000, you need to give the bank $125,000 worth of securities. So, and obviously that is very difficult for early stage companies and SMEs. So that brings me to the mistake thing. So they don't really study that financial ecosystem well, and they think that one way or another they will have access to that capital, and in many cases they won't. So that's one issue. And second, of course, is the due diligence and the statutory compliance, because when when they fail to access to local capital, debt financing, they go for equity or blended finance options. And when you start engaging with an equity investor, of course, the first thing they will check is the due diligence and the statutory compliance. Unfortunately, in many cases with the local companies, the compliance is not always there, both on the statutory side as well as on the financial side. When it comes to their financial statements or annual returns, they are always delaying, or many aspects are not in place. So this is another mistake which they are commonly doing. And third, so there is a term in our business which we use a lot, which is being investment ready or investor ready. So overall, unfortunately, they are not investment ready because of these issues that I mentioned. Non-compliant due diligence is not in place, financial compliance is not in place, but also they don't have proper pitch decks or presentations or feasibility studies or financial projections in place. And without these components, of course, it is very unlikely to secure equity investment or any blended finance.
And thank you for that. It's really important. You touched three important points here and three important lessons. And on the other side, those are the challenges, the mistakes that SMEs does. From the other side, which are the opportunities for investors that you see, especially in emerging market? Which sectors do you think they are interesting, and where, if deployed capital can give important return, also social, not only economical?
Well, you live in Africa, so you know as well as I do, the opportunities are massive and endless, really, especially if you focus on the sub Saharan Africa. And if you focus on the more stable countries, both politically and economically, which Tanzania and Kenya is among them, the opportunities are really endless because you need to look at the demographics. For example, Tanzania is now close to 70 million people, one of the fastest growing population, not only in Africa, but in the world. By 2050, it is expected to reach 130 million people. It's a massive land, so it's a very big country. They have all the resources, natural resources you can imagine, from metallic minerals to gas, from tourism destinations to water sources. Like, it is really, everything is there. And we were talking about the population. Not only population is growing so fast, it's also one of the youngest populations. So more than half of the current population is below 20 years old. So when you combine all these components together, you can clearly see that from the market space, particularly, it's a massive and growing market. So anything and everything you do, as long as you do it properly, there's a market for it. And also the purchasing power is increasing day by day. So yeah, therefore I will not focus on any sector particularly. because there is an opportunity in every sector. And I'm not exaggerating. And it's not only Tanzania. Many other African countries is also in the same basket.
And let's go to Afri Capital now, because that is, I mean, I totally agree. That is the African side that we see here. People, I mean, the youngest population, growth, so massive opportunities in this area. That's why we are also on this side of the planet. And now going to Afri Capital. So can you share one or two, success stories and how you have really transformed the business and how the capital has helped the business go to the next step?
Sure, I can give you example of the latest two transactions that we closed. So one was in November last year, and one was in December. So the November one was a relatively large ticket size, $15 million for an SME actually in Arusha. Is an agro processing company. So it is a refinancing plus capital deal. It's a local company. We raised the funds together with our partners from UK, and the investors. It's a fund basically. The funds came from a fund, and the investors of that fund are various, including DFIs, individual institutional investors, and also family offices. So this company in Arusha needed some dire capital injection for the working capital as well as refinancing, because they had some major current debt facilities with the local banks, but they were struggling to repay. So they needed a financial product with a better terms. And we got that for them. So basically, the current facility that we got, it is offering them a longer grace period, more than 3 years, and that 3 years is giving them enough room to build a strong cash flow and a lot of breathing room, basically. So, so we are hoping that with this facility now, they will revive their operations, become profitable, and grow substantially. Not only in Arusha region, but also across Tanzania. So that was a very impactful transaction. And the second one, it was a $3.5 million transaction in this dispersed in Tanzanian shilling, which is equivalent to 9 billion. So this was for a local commercial bank. So it's a financial institution, a tier two bank, but listed in some stock exchange. So fully compliant. And their main mandate is to service education system in Tanzania. So this loan will be used for them to service their clients in the education space, but the 50% for the goes to education space, but the remaining 50% for SMEs. So of course, this is also very, very impactful transactions, considering that we are directly financing a bank, and that bank is financing the education ecosystem in Tanzania. And I'm happy to say that there will be one or two more tranches coming for the same bank. So yeah, those are the latest transactions that we closed, and we are very proud.
No, I can see. Thank you so much for that, because the first one really, if I have understood, it really shows how capital can help, increase profitability and remove the financial burden, because financial institutions sometimes they have very punitive terms. We know here in Kenya, but also Tanzania, interest rate is very high on the tune. I know now here the central bank can reduce, but it's still 15, 16%. So, and really, it can help diversify the debt. And the other one, it's really impactful because it really translates into the work of educational, supporting the education, supporting SMEs, which is really something that translates, the sort of finance that also has a part of impact. And I want to ask these two questions. You have different tickets and size. So usually for finance and private, do you have some tickets that you usually have in mind for companies? And the second one, do you also look beyond, let's say, economic performance, economic metrics, also to look at social, environmental, and other measures when you do investments decisions?
Of course, regarding the ticket size, our ticket size starts from $200,000. So that's our bare minimum. But we also need to be honest. Unfortunately, small people think that usually smaller ticket sizes are easier to raise capital for. But in our business, it's vice versa. Smaller the ticket size is more difficult. So we have a very good deals in our pipeline with smaller ticket sizes, whether it's early stage companies or startups or smaller SMEs. But unfortunately, due to various reasons, it is quite challenging to raise capital for that. So most of the deals that we are more successful at accessing to capital is usually above $3 million. So that is a good threshold from the financiers and investors perspective. So that's one. Regarding the impact you were asking, of course, it is a massive part of any deal in our pipeline, because now most of the financiers, DFIs, or institutional investors that we are dealing with, they are mostly from Europe. And European investors are really focused on the ESG perspective of any deal. So therefore, ESG and positive impact overall, whether it's women empowerment or environmental agendas or any socioeconomic aspects, are a big part of any deal.
Thank you so much for that. And I want to and a subsequent question. Usually there is a lot of discussion in the space about the funding gap. There is so many opportunities, but not enough capital. There is also a lot of perceived risks in the economies, in emerging economy that sometimes can scare investors and others. So how do you address this? What are the steps that maybe governments or enterprises or investors should do really to reduce this perceived risk and also improve, the financial flows towards Africa in a way?
I slightly disagree on the gap, because I don't think there is really a gap. Yes, there are lots of companies looking for capital, but there are lots of investors and financiers looking for good projects. The problem is those projects are not yet suitable for those financiers or investors because of various reasons. As we said, mostly lack of due diligence or compliance or so forth. Otherwise, the money is there, out there. Investors are desperately looking for good companies to invest in. So definitely the funds are there. So what can it be done is there are so many things can it be done. First, but I think most importantly, as you correctly mentioned, it starts with the governments. So the governments should provide the suitable regulatory frameworks for the entire ecosystems, as well as for those local companies to be able to access to those foreign and local capital. From a local capital perspective, we know the challenges. We already discussed about it. But for accessing to foreign capital, there are also regulatory challenges. Because I live in Tanzania, of course, I can mostly speak about Tanzanian regulatory framework. There are issues. There are taxation issues, sometimes double taxation, or there is retainer earnings issues. There is capital gain tax, which is a major problem in this investment environment. So there are lots of regulatory challenges. So if those are fixed in time, and if also the SMEs will get, or SMEs and startups will get a further understanding and knowledge on how to deal with investors and financiers. I think in time that that gap will not be there. But of course, this is not. It cannot be done by today or tomorrow. These are ongoing processes. But I want to believe that eventually we will get there.
And it's really important. And if I can add that, for example, look at my experience with SMEs, especially the grants or the philanthropy, what NGOs are doing is helping them, to become bankable, to become investable, to get to a size where you can become interested because of the ticket size and others. So that could be a win-win partnership with private capital and philanthropy or organization, really, to help the pipeline and increase the pipeline. What you say, the people are looking for good companies. Their money is there, but the company, maybe they have, what you say, the issues that they are not able to be funded. And going on that, if you can see which is the perspective that you can see in the next maybe 3 to 5 years in this emerging market world, how do you see this capital and private equity shaping, really the ecosystem, the growth of companies, especially maybe from a Tanzania point of view, maybe from more an East African point of view?
Sure. Of course, as you said, mostly from the Tanzanian point of view, government is taking some actions to accommodate private equity and venture capital more and more to Tanzania. Kenya, on the other hand, is much more developed in that space because they've been in that space for a long time. So when it comes to startups and early stage companies, Kenya is leading not only in East Africa but one of the leading countries in the entire continent. On the other hand, Tanzania is very new in that space, but government is taking the right actions slowly, but in a steady manner. They are taking the right actions, and I believe in the few years to come, that ecosystem will grow a lot. That said, of course, private equity and VC, it's coming with their own challenges because they carry a higher risk component for the investors. So therefore, I think debt, private debt, will always be faster and easier when it comes to closing deals. But eventually, PE and VC also will get there.
Thank you so much. And a last question on this. We had some other people from the private equity before in other episodes. And there was a debate, how to democratize the space, also having not only big investors, and we want to ask what is your take on that? Not just the big investors and all, but also, small scale investors, individuals that they want to put there. On the other side, the contrary argument says, yes, of course, fantastic, it's very good to democratize, but smaller investors, they don't have the capability and the risk that is in the private equity space. What is your take on that? Where Afri Capital move? Are you more on the traditional investor, bigger investor, or you want also to bring, let us say, a more democratized space in the investments and private equity space?
It is a slippery slope. So I would say, from my own perspective, if you want to deal with smaller ticket sizes, the best will be not to deal with those those companies individually, but to set up a fund and manage that fund. And the mandate of that fund should be catering smaller ticket sizes, and you will get the necessary precautions for the risk component. But if you want to deal with larger ticket sizes, including for PE and in some cases even VC, I think an individual approach would be more suitable for these markets. Of course, for developed economies, both both options will be catered through funds. But here again, this is completely my personal view. I think it is more suitable to deal with the smaller ticket sizes through a fund. So basically via fund management, but for larger ticket sizes, an individual approach.
And that is true because you have to deal with difference, and also that there also the complexity in arranging the instruments and also the governance. and also having to deal with many people on the board, which is also time consuming, especially in our markets. And as a last question, what would you like to see, in the next maybe 2 3 years, just to change and really to see this country, I mean our area, would do to really boost, the growth and also the uptake, of the private equity?
So the fact is, let's assume the worst. Even if the government don't take the necessary actions and the necessary changes or updates on the regulatory framework, this ecosystem will grow organically. There is no other way. I mean, because when you look at the entire globe, there are only two places left with such opportunities. It's Africa and Latin America. Like, let's be honest, there's no one else. There's nowhere else because when you look at Europe or majority part of the Asia or North America, the competition is massive and there is not much room to grow anymore. But Africa and Latin America, it's different ballgame. So whether with the help of governments or not, that's why I'm saying the growth will be there because investors are looking for growth and the local companies are looking for capital. So one way or another, even with all of the challenges, they will meet. Nobody can stop that. But on top of that, if the governments will be helpful to initiate the necessary changes on the regulatory environment, then these ecosystems will really boom. There is nothing you have to do. Everything else will align organically. The banking industry will align accordingly. The local markets will align accordingly because that's how capitalism works. If you have the capital wants to enter, and if you have the opportunity, a good opportunity waiting for that capital, they will meet. No, nobody can stop that.
And that is a very positive outlook for the future. So we are here in the right moment at the right place, really to see the growth of this country and really the turnaround of Africa. So I want to thank you so much for your time. Burak, it's been a pleasure and honor having you to the podcast. Thank you.
Pleasure was mine, Samuel. Thank you for having.
Are you satisfied after this wonderful episode? Let's continue together our sustainability journey.